Well, I've been hoping to get my next guest on for a little bit now. Allison Schrager, who you might have remembered from Quartz, now is at the Manhattan Institute. First of all, Allison, congrats on that jump.
Thank you.
And I hope everything is going well at the Institute during this time.
Yeah, I mean, it's a great time to be there. Not that it's a great time to be anywhere, but to be in a job where you can just try to make sense of things is, I think, where you want to be if you're going to have to be anywhere, because there's just so much to process. So I'm lucky that that's what I get to do for a living.
Allison, you've been focused on the millennials and how they're controlling the economics and dealing with that. Are you still on that path at Manhattan?
Yeah, I mean, I think I guess I think about everyone. I mean, in theory, I worry about retirees, but I always look at the retirement problem as a lifelong problem. So I think millennial economic trends certainly have always been super interesting to me too.
Well, let me first cover the first topic, which I was really intrigued with the headline. Americans own more stock than ever. So, what do you mean by that exactly? Tell us all about that article.
Well, stock ownership is now about 50% of the population. And traditionally, it was a very small minority. Like in the 60s, only a couple percentage of people own stock. So now we're all like sort of much bigger shareholders in this economy, at least directly.
And obviously now they're going online, right? So that's kind of helped the stocks as well.
Yeah, I mean, a lot of the growth in stock ownership came from the 401k, in that it sort of forces you to own stocks or makes
Hmm.
it very easy to, as opposed to before, people either had access to no sort of retirement saving or they had defined benefit plans where I guess they were exposed to stocks indirectly, but the employer was bearing all the risk for them.
Has this pandemic, we've seen the effect on the stock market. Are we starting to see a rebound? What are you seeing from your point of view?
Well, I mean, I think the stock market certainly is, today it was up. Certainly probably going to be, I'd expect it to be very volatile going forward
Okay.
until, we know a lot more, probably at least through fall. But, it's fascinating because usually we talk about negativity bias, in that, we tend to put bigger weight on bad news instead of good news.
Sure.
But the stock market goes up and down with every bit of news we get, but it certainly seems to go higher on good news than lower on bad news. So they seem to have stock market appears to have a bit more of a positivity bias.
Has this economy affected people's willingness to buy stock, or are we doing even more?
I don't know. I mean, I think most stockholders are fairly passive. They're doing this through their retirement funds, so they probably haven't changed their behavior, especially we've drummed into people not to. I think only the very sort of bold are actually trying to trade on this. But I would expect less buying because usually when you have a recession, rather than cutting wages, employers cut 401k contributions. So that will be less people buying stock.
In 2008, we had this kind of thing where the economy completely collapsed. Um, Obviously, people recovered from that, but have there those that weren't recovering from that now will not have a chance to recover from this, or can we recover from this?
It really depends on how it goes. I mean, the good thing is, I mean, we did have a very long recovery. It was slow, but it was long.
Hmm.
I'd expect this would be quite different. I mean, it really all depends on the path of the virus. I mean, I think if tomorrow, not that this is going to happen, we had a vaccine and everyone got it, I think we'd have a very vigorous recovery and we'll come back very strong, very quick. That's not going to happen. So because this uncertainty is going to persist and there's probably going to be a lot of steps forward and a couple steps back here and there, I think it's going to be pretty slow slog to get out of this. But how much damage is done in this slog will really just depend on how the news is.
Uh, are you finding us millennials are kind of invincible, still feeling invincible when it comes to the economy, or have we slowed down a bit?
Um, I don't know. I mean, I think there's still a lot of positivity. I
That's
mean,
good.
millennials certainly been knocked down, but of course all generations are knocked down.
Right. And now you said you were focusing on other topics. So what exactly have you been writing about at the Institute?
Writing about sort of, I guess, the economy more generally, various policies. I've always thinking about retirement. So I think, I guess, the economy for everyone, not just millennials.
Well, and for everyone, I mean, there are still small businesses that are thriving, right? And we have to shout out those people too.
Yeah, I mean, some are. I think more aren't. I
Right.
mean, at the very least, there's a lot of uncertainty right now, and I think certainly uncertainty in the job market. In some ways, millennials are lucky. I would not want to be graduating into this market, but at least
Mm.
millennials now, they're a little older. Unlike in 2008, they all have some labor market experience. So
Mhm.
I'd be honestly less worried about them than I would be Gen Z right now.
Well, how's the all these stimulus packages affecting the economy that we may not be hearing of?
Well, I don't think we really know what the stimulus is yet. I mean, the prior fiscal policy was very much focused on keeping companies on life support during a shutdown. But now that
Right.
we're coming out of it and coming out of it slowly, we're going to need very sort of different fiscal policy. And so I still don't know what that is. I don't think anyone does.
The word bailout has not really been rearing its ugly head here. Do you know why that might be?
I think because we're more sympathetic to the companies that we're bailing out. Bailout was a
Okay.
bad connotation. And also, I mean, I think that's even fair. I mean, I think the stress that most companies are going through financially, it's not like it was their fault. It wasn't like 2008 where there was someone being really reckless. I don't think, it's fair to expect companies, especially small businesses, to keep the sort of cash on hand to handle this sort of event that was so, unexpected and so economically devastating.
You know what's interesting also is we were kind of telling companies, "Oh, we'll bail you out because you can't help yourselves." Here, in a way, we're telling companies, "We want you to build these N95 masks. We want you to be involved in a way we've not seen before, right? During a crisis."
Yeah, I mean, certainly, I've never seen, I guess, during wars, we used to do that.
Yeah. I mean, they're all really pitching in, these big corporations, which is good to see. And I do like when the companies that are doing well give back the stimulus to those who aren't. So there's that kind of sharing going on too.
Yeah, I mean, I don't know if they did it out of the goodness of their heart or it was sort of public relations issue. I think that's what makes it interesting. It's like all companies need support now, big and small.
Sure.
And I guess the biggest risk right now is sort of a political backlash from taking money if you need it.
You know, Elon Musk is in the news because of all what he wants to do with his plant. But I mean, I remember just a few months ago, he was in the crosshairs with the Securities Exchange Commission. So was there an update on that, or what ended up coming out of that?
I don't know. I'm not really following it.
Okay. I just know that he was in hot water, but now he's kind of switched and said we're going to build the plant. So it's interesting to watch. Are you sort of seeing behavior like that within your circles? Like, yeah, we want to get back open and we don't care what they tell us?
No, I mean I'm in New York, and I think people are maybe because we had a pretty bad experience. I mean, people are definitely anxious to get back, but I don't think they're pushing it or flouting regulations that much.
Well, we are seeing some companies and diners and restaurants open up now for delivery and takeout. So that's a good thing.
Yeah, yeah, for sure. And
And
you
no,
know,
go.
I get excited every time I walk by a company, any restaurant, and see like a long line of takeout packages ready.
Allison, I know you also had a book out. So tell us a little bit about that.
Oh, that was a year ago. It's called An Economist Walks into a Brothel, and it's all about useful now, different ways to think about and manage risk.
Well, and I mean, that book seems timely for this moment, don't you think?
Yeah, yeah, it's gotten a little uptick in sales lately. I think for that, it's all the ways different people think about and manage risk, and yeah, now we're all risk managers.
Well, right. So, what is the biggest risk right now in a lockdown that someone could take aside from buying a stock in the moment?
Well, I mean, obviously, there's risks to your health.
Yeah.
So,
Yeah.
I mean, I think as we're opening up and figuring out we have to live our lives with this virus, there's no way of avoiding that risk, but you can do
Right.
certain things that are riskier than others. And as I said, like, I mean, if you're a business owner, you know what you're willing to open, how much liability you're willing to take on. There's a lot of uncertainties now.
Allison, you've been following economics for a long time now. So, uh, I also believe in the human economy. How are we treating the human economy right now with all these mixed messages? Yeah, we should open up. No, we should keep closed. Like, how's that
What's the
doing with our
economy?
the human economy? Like, every person, we are our own kind of economy where we just produce everything and we want to keep ourselves safe. So, what are we telling the human that wants to get back to work? I feel like we're telling them mixed messages. No, you can't. Yes, you can.
I don't know. I think we've gotten consistent messages that, you couldn't. And now, hey, we're going to do this and this is how we're going to do this.
Have we reopened the economy slightly since this started? Like, have you seen a jump?
Yeah, for sure. I mean, even New York isn't technically open, but it feels more open.
Well, right, and that was the other thing. Maybe you'll agree that the media did not tell us everything was open still for delivery. They kind of just said everything's closed, and I always thought that was a bad thing on their part to just say everything's closed when that wasn't really the case.
Yeah, I think, I mean, there's certainly a lot of confusion.
Yeah, definitely so. So what projects are you working on now? And what are you, I know you're doing some interviews now. So what are you talking about?
This is certainly, if you're an economist, as said, there's a lot to think about, a lot to make sense of. Policy, sort of, long-term outlook, for businesses, for individuals.
Is there a big debate between how we do this amongst economists?
Certainly. And, I think it reminds me a bit of 2008. And when you're an economist, you learn the most when things don't work. So seeing how the economy responds and how it's going to come out of it, I mean, we're learning a lot.
And do you find, is there any panic buying into stocks or panic selling into stocks that we're seeing right now?
I'm sure. I mean, instead, I'm an efficient markets person, so I don't
Right.
speculate too much on it. But I mean, I imagine, yeah, there's a lot of panic buying and selling. I mean, I think because the long-term outlook is so uncertain. So, every day, the slightest bit of news, the stock market is going to do something, either soar or crash.
Have you seen this be such a reactive one before, like in prior administrations, or is this one of the most reactive markets you've ever seen?
Uh, I don't know. That's a good question. I remember
Because
being pretty volatile for a while in 2008.
it
Um,
seems like everything, even Trump tweets, are affecting the market today.
yeah, but overall, it was up. I think, as I said, it seems to have a bit of a positivity bias. The
Uh,
news about the vaccine certainly sent it going.
oh, that's gonna send it soaring. So I'm glad. And the other thing with the economy is, what studies are we going to start seeing over the last couple of months? Obviously, the unemployment claims are one big deal that we have to combat. But what other studies are they looking at when it comes to economics during the pandemic?
Who's they?
Or anybody like whoever releases studies on these economic policies and whatnot.
Well, I think everyone's looking at the data. But I mean, the data as well is sort of has less meaning than it normally did. It's a very different kind of shock than before.
This is an extreme shock, and as you say, no one can really be blamed for it because it wasn't our fault.
Yeah.
So, Allison, thanks so much for joining. And where can people follow you?
I'm on Twitter at Allison Schrager. Real easy.
And that's great. And you're at the Manhattan Institute, which is also pretty good. So, Allison, thanks so much.
Thank you.
Take care.